Hey friends, today we're going to run through how to run rental property numbers for a unit rental. So that would be a unit house hack or a unit rental. So either a multifamily property like a duplex, a triplex, or a quadplex that has multiple individual units, or a single family with an accessory dwelling unit in the basement or in the backyard. Separate kitchens, separate entrances, separate properties, separate spaces rented to two different groups of tenants. So first thing we always do is look up the subject property in Compass. Today we're going to do things a little bit differently, and we're going to go for a off-market property. So some of the information here on Compass won't be accurate because we are looking at a property that last sold in 2011, and that we're now considering purchasing off market for between $1.5 and $1.6 million. Triplex over in Ballard. Here's the address. We'll start here by just filling out some of the basic information in the Househack Seattle rental spreadsheet in this rental ROI section right here. So I'll move my face over to the side here. So this spreadsheet here has a couple of key sections that we're going to be focused on. Those are the sections that are outlined in orange here. So that's the financing, the rentometer data, and the unit mix. The rest of these sections are a little bit more advanced, and I'll shoot a separate video on what to change there, if anything. But for a basic kind of quick check of whether this property makes sense as a rental or a house hack, those three areas are really all we need to be worried about. So to start off, let's just put the address of the subject property in here. The type is a duplex or a house. The list price, let's just put in for this one, $1.6 million. And the purchase price, $1.6 million. If this was a listed property, we'd put the list price, and if we were considering escalating, the escalated purchase price there. The type of loan here, you can choose conventional owner-occupant if you're moving in, FHA if you're moving in, vacation home for like an Airbnb or an investor or VA loan. We'll do investor, and that does automatically update the interest rate based on kind of the prevailing interest rates at time. We'll change the down payment here to 25% since I'm analyzing this today as a rental property, not as a house hack. If it was a house hack, I would go for a multifamily with FHA and 3.5% down. But let's take a look at it as a rental today. First things first, we've filled out the financing section. Estimated insurance, typically I do $90 for a single family, but for a multifamily this large, I want to do at least $120. We need to fill out the property taxes per month. When we go here, typically we can find this number right in Compass on an active listing here. If this was an active listing, I'd just put in 6,282 and divide it by 12. This property actually is not an active listing, so that's the 2011 property taxes. To find the current property taxes, I can click here at Realist Property Report. And this is the tax information and county information for the property. You can see here that the zoning is LR1. We'll use that in our spreadsheet. And the taxes for 2021 are $12,892. So we'll just take that, copy it here into the spreadsheet. Oop. Right here. And the property tax amount equals 12,000 and change divided by 12, since we want the monthly number there. So about $1,074 a month. This is a expensive property. Next up, let's scroll down since we filled out this section with the list price and the purchase price. and the loan type. And by scrolling down here, let's get to the rentometer data section. So we'll just go to rentometer.com, and you can get a couple of free rental reports here through Rentometer, or you can pay for the pro account like I do. We'll put the address of the property in, which is 1527. Copy paste that here. We'll do a summary. Building type is a house/duplex. And analyze. So here we've got a kind of breakdown of the different rental amounts. I'm just going to kind of copy paste that over here. There we go. For reference, and fill out this rentometer data table with those numbers. So the average rent is $17.81 for a 1-bed, $23.74 for a 2-bed. Again, I'm just kind of looking at the rental amounts here or here. On rentometer to fill this out. $33.82, and for a 4-bed, $35.75. And we'd go down the line filling in the median, and then the top 25%, the bottom 25%, the bottom 10%, and the top 10%. This is a pretty average rental property, so I'm going to use the average numbers, and because of that, I won't need to fill in the rest of this. But if you fill it all in, that will allow you to take this quality after renovation tab and change it from luxury top 10% to newly remodeled to average to below average, and actually have your rental property numbers self-update based on the quality of the unit, what the ROI will be. So that's a cool little feature here. I'm just going to keep it on average for this tutorial, so just fill out this one line here. Next, we need to figure out what the number of bedrooms are in each of these units, and then also how many units there are. So we'll go back here to Compass and scroll down to this section labeled multifamily. We can see here the unit breakdowns. Unit 1 has a washer dryer, a range, dishwasher, 1,600 square feet, 3 beds here, and 2 baths. Unit 2 is 2 beds, 1 bath, and unit 3 is 3 beds, 2 baths. So let's fill this in here, and it'll actually automatically update our rental numbers for the 3-bed unit, $33.82, the 2-bed unit, and the 3-bed unit. So we're looking at a 6% cap rate, which is above the current market average. Actually is 3.9% in the US, which is abysmal. The market average for people who actually know what they're doing is 5% cap rate. So this is above average cap rate. GRM, we're seeing averages of about 17 to 18 right now. For people who have no idea what they're doing, nationwide averages, investors, we're definitely getting under 15 or lower. GRM is like golf, lower numbers are better. So that's a good number here. Cash on cash return is a little bit low at 4%. I like to target 8%. But one of the reasons why is this is a $1.6 million property that we're putting 25% down on. So obviously the cash on cash there is lower because we're putting a lot of cash down. This does look like a good deal, and you can see down here with the real estate versus S&P 500, even just assuming 5% appreciation, which of course our Seattle market has done quite a bit more than that lately, this property performs pretty significantly better than real estate. That initial investment here, which you can see total cash invested, $427,000. That initial investment turns in just 10 years into $1.5 million. With real estate, whereas in the stock market would just turn to $729,000. let's take a look at this one as a house hack just for fun. That is most of the actual process that we are looking at, with one kind of key difference. If this property was tenant occupied, which it is not, we can fill in this current section with the current rents. Let's say it's rented a little bit below market, tenant occupied at $2,800, $2,000, and $2,800. So that's the current rents, and this would be the market rents based on averages for the area. After we do that, this ROI at current rents section fills in. So you can see at those current rents, if that was the leases you were taking over, it's actually cash flow negative. And GRM is a little closer to average, cap rate is a little closer to average, right? So this allows us to look at, for turnaround properties that are rented below market rate, what the current ROI is, and then also what the ROI is for the market rents. Let's say that this property had certain units with decks, and in fact it does have units with garages. If we wanted to add a little bit of a bonus there for garage rent or something else, we could add, say, $50 for garage rent to this adjustment column, and that will, as you can see, automatically update the market rent amount. So you can use these for little adjustments, or for instance, if this ground floor unit is less nice than the other units and you want to lower the rent by $100 there from market, you can make adjustments there. Last thing we'll do, we'll just take a look, just for fun, since we are the Househack Seattle team, at how much better this property performs as a house hack. So we'll flip it to FHA and change the down payment percentage to 3.5%. Here you can see cash flow obviously drops with less money down to 500 and change. The cash on cash is going up to 8% because we're investing less cash. And you can see that now real estate much more significantly outperforms the rental property, or the S&P 500, excuse me. The only other things to be aware of here are the cost assumptions, which you can change: vacancy rates, maintenance and repairs, capex, utilities, etc. And the interest rates and purchase price numbers that you can change based on what your acquisition cost is. In video number 2, I'm going to run through this offer checklist and a few other kind of advanced pieces of this spreadsheet. Peace, friends.